Hey, hi. Yeah, it's me again. Today we would like to talk about the Dow Jones, which is it's had a 12-day run. Um, it wasn't in a straight line, but it has gone on an uptrend for the last 12 days. Um, so as you know that the S&P 500 consists of the Dow Jones stocks companies and also the Nasdaq companies. I can't remember the weightings, but usually in layperson's term is we would classify the Dow Jones would be those value stocks, traditional stocks that are like McDonald's, Pfizer, Johnson and Johnson, Domino Pizza, those kind of company, or energy, BP, Shell, and all those company. And then Nasdaq you would classify the big techs as well, and like Apple, Amazon, Google, and all those companies. So the thing that, as you can see, the last couple of months, Nasdaq has had their run, especially in the big seven stocks, Nvidia, Meta, and all that. But the rest of the Nasdaq market, especially the mid cap and the small cap companies, haven't actually gone up very much. Well, most of them are actually startups and are not making money anyway. So, but some are actually turning into break evens, and profitability is on the way. So I just want to show you this Dow market straight days of gains, 12 days. Is it a rotation, or is it a bear market trend?
Let's break down some of the biggest moves that we've seen over the last several trading days, and taking a look at the Dow's performance over the last 5 days, closing up just about 2%. Like I just said, that 3-point gain that we did see today, enough for the Dow to close in positive territory here, Miles, for 10 straight trading days in a
bank stocks also would consider as the Dow Jones index stocks.
We've seen a number of Dow components report results over the last couple of trading days. Amex was out this morning. That disappointed the street, the worst performer in the Dow today, but strong results from JP Morgan earlier this week. Johnson & Johnson, that did give the index a little bit of a lift.
Yeah, and I think, watching the Dow's performance this week is as watching, the markets overall start to do the rotation that all the bears thought needed to happen. Otherwise, the market was going to go down, which is, we had this narrow leadership where tech is doing all of the driving, pushing us higher. Nasdaq's up 35% or whatever it was at the peak. And everyone says, when's everybody else going to get into the mix? And you look at today's market on a sector level, and you have XLC Communication Services, that's down 1%. Meanwhile, utilities are up 1.5%, healthcare is up 1%, energy is up 0.9%. So you're starting to see these more cyclical sectors get in the mix. That's a little bit more heavily weighted within the Dow. Certainly, the Nasdaq being a laggard, would be indicative of that. But another interesting day in the sense of the indexes, not really telling the story. Like, I think you have to look at sector level, and then certainly at some individual names where you had some action today. Look at the kind of life sciences names like Danaher, Thermo Fisher. They were big winners today. And so watching those dynamics play out has really been interesting here as the market moves into the phase that, again, quote unquote, everyone said.
Well, I will post a link here for you to watch again if you want to. But basically how I see is it is a bear trap, especially the Dow Jones run. As I did mention before, the bank stocks and all that will be affected by the high yield. That's this is a 5-year Treasury yield, because the interest rates, Fed has actually increased in a very sharp rise, and it's very difficult for banks to play catch up, especially if they were to offer, let's say, consumer for depositors, let's say 4%. The next day, and then they will buy a treasury yield to protect their say, to get the yield and actually pay the depositor at maybe 3.5%. But the next day, the yield actually would go up to, let's say, 4.5. And then other banks would compete and start to offer deposits at 4.5. So this current depositor, which gets a yield of 4%, would be shifting to another bank. And the bank would be losing money if the rise in the interest rates rise at a steep curve and very hard for banks to do that matching to be able to maintain at least don't lose money or whatever. So the narrative of rotation to banks or industrials or energy stocks, as you can see, energy stocks lately inflation seems to be inching back. The crude oil is like back to 70 plus, near to $80. For me, I felt that I did mention before, most of the energy they will take loans and debts to finance upstream oil project, and if their profit is single digit, and then if they get they have to pay a debt of like 4 to 5%, it might wipe out their entire profit. So value play here in a higher for longer interest rates regime, for value play type of companies, I think personally it's not financial advice, but I would say that it's not the way to go. So it looks like there's a trap. It's a bear market trap. So I'll just show you that the interest rates yesterday went up quite a bit, it inched up here because of US being the buyer of treasury bonds, US treasury bonds, the 2-year, 5-year, 10 years, 20 years. They would have they are actually buying back their own bonds so that they can maintain low interest rates for their bonds. So if they were to rechannel their funds to buy their own government bonds, it's less likely for them to buy up US bonds. So US bond yield will continue to go up, and that will definitely affect banks, and the likelihood of more banks collapse would be there. So yeah, please do be careful if you have exposure in those Dow Jones companies. So yeah, that's all I have to say for today. And this is the latest news which causes the market to go downtrend on Thursday market after great Q2 earnings by Meta and strong GDP growth. So yeah, please like the video, and I hope to see you again, and subscribe to the channel. Thanks.